Greetings everyone, welcome aboard. Happy Monday to you guys. March 28th, 2011. Here's your live trading recap. My name is Joseph James, schooltrade.com, sidewaysmarkets.com. Now, almost there guys, we're almost there. April 1st, we are right around the corner. I can smell it, right? We can taste the end of the first quarter coming here guys. Almost there, almost there. Monday morning, end of the first quarter, we're expecting to see some slow volume today. Now remember, what's going on right now? It's the last couple of weeks of March. It's the last few days of the first quarter. Now normally we see lots of volume, lots of opportunities, lots of movement all day long, but this time of year, those last week and a half, 2 weeks of March, right, boy, they literally sluggishly move through as traders are distracted, focusing on finishing up their first quarter, padding their numbers for their boss or for their clients or whoever they're trying to impress. This time of year, we see lower volume, fewer opportunities, and it's really just this time of year. It's just these last couple weeks of March, the last couple weeks of the first quarter, and we got the second quarter coming right around the corner. Right, that's going to turn around. We'll see much better volume, a lot more trading opportunities once we see that volume come back. That's the problem this time of year, is that it slows down so much. We just don't see as many trading opportunities. Makes it more difficult for us to feel confident. Now, one big thing this week though that's different than last week. What was it? Last week, I know we were still slow last week, but there was one big thing that really made it even slower, and that was the daylight savings time in Europe. If you remember, 2 weeks ago, we sprung forward, right? Spring your clocks forward an hour here in the US. So we lost a day of sleep, or lost an hour of sleep 2 weeks ago in the US. Well, same thing happened this weekend in Europe, right? A little bit different. 2 weeks later, they then roll forward, right, to the daylight savings time. So last week and the week before that, we had the European traders, right? They were late to the party. They came in late every day, which meant the 11:30 European close actually was 12:30, and it really did a great job at messing everything up. So daylight savings time now, we're all both in the same schedule now, whether you're in Europe or whether you're in US, right? We're both now in the same daylight savings time, and that really showed a lot more volume today. Still pretty darn slow out there. But this is something this morning, that daylight savings time in Europe, that we're really excited about, because that's just one more thing we've got to get past here before this market starts coming back to life the way we like to trade it. What did we see this morning on dollar, right? The dollar index, what do we see? We had the dollar rising this morning, didn't we? Now, we picked up on this dollar right away this morning. About 8 o'clock this morning, we did a really good job today, knowing it was going to be slow in the markets. We did a good job at going through our morning routine, and I did it live this morning instead of doing it on the blog and then going over it. So it was a great example this morning how to go through every step we take in our morning routine, making sure we have everything accounted for. With that, this morning, we saw the dollar. And the dollar was rising, and we said, wow, if the dollar keeps rising, we should keep selling, right? Negative correlation. The problem was, while the dollar was rising this morning, crude was falling at 8 o'clock this morning, but very, very slow. Remember I looked this morning? I was doing my morning prep today, and in the background, I kept watching crude drop, but it was just very, very slow speed. So I kept telling you guys, be patient. We're going to get better speed later on this morning, and we definitely did. We also noticed the dollar was rising, but eventually that dollar would hit resistance. And we said, you know what, guys? If this dollar hits resistance, it's probably going to drop. And if it drops, it's going to give us some buying opportunities. So we looked for that, and boy, that came at 9 o'clock, didn't it? At 9 o'clock, the dollar had hit those highs already. That meant that the crude was going to stop dropping and now start rising, with that dollar now tumbling off the highs. So we did a great job this morning at avoiding those low volume chop and slop moves as crude came tumbling down. But then sure enough, we were ready for it when crude started coming off those lows. Dollar, we pegged it, right? We knew exactly what was going on. We saw that dollar at 9 o'clock curl over and start to drop. We bought the lows on gold. We bought the lows on crude, right? Great example there. Actually bought the highs on crude. We'll take a look at that in a moment. But dollar tumbles off resistance at 9 o'clock, and we were waiting for it, and that directly resulted in our first trade of the day on gold. We bought the lows on the gold, right? It was perfect. While the dollar was rising, the gold was falling. Even though it was at low volume, once that dollar began to fall, gold was at its lows. We saw some great speed pickup, and I bought those lows on gold. A perfect scenario of using that dollar correlation. Now, we said after that was, we said, wow, finally we got enough volume in the market to actually have a correlation. Remember last week we talked about how last week it was so slow, right? Such low volume that we didn't even have a correlation. It was just dollar went up and crude said, well, I'll go up too. Why not? Right? There was no correlation last week. This week though, hey, there's two things now. Daylight savings time from Europe is now behind us, and we're seeing the correlation work, right? If it keeps up with this, guys, we'll be right back to our normal routine at the end of this week. So very excited about the fact that we saw that correlation working well today. If you're with us last week, you know it wasn't working very well last week, and it really kind of kept our confidence at bay all week. Then, with that dollar dropping, very interesting situation on crude today. We looked back in time and saw, well, I'll specify, my good friend Mike this morning, one of my guests in the room, he made me aware of the previous low of day on crude. Great job, Mike. Hats off to you. Right? So Mike says, hey Jay, what about the 104.50 area? That was the low of day on Thursday. And what ended up happening was we had dropped so much on crude with that dollar rising. By the time the dollar fell at 9 o'clock, we had crude begin to take off to the upside. The problem was, though, still real sloppy, had a hard time getting to some trades until we broke above that previous low of day. And we always know what to do with that previous low of day, right? We break above that previous low of day, be a buyer. Break down below that previous low of day, be a seller. So we saw buyers push above the previous low of day. Then all we did was wait to buy a pullback for a nice wave pattern long on the crude. That was only one trade on crude today, and it was a wave long, and it literally lined up perfectly. You'll take a look at that in a second. Now, what was the big picture, though? What did the big scenario look like today? Very slow. We're still seeing this slow speed. We're still seeing that concern about the speed picking up, and then before it really gets going, it falls apart, speed drops, right? Like we saw last week. The difficult part about last week was we lost confidence in our patterns very quickly when we saw the speed pick up, the buyers come in, momentum confirmed, we get into the trade last week, and then what happened? Nothing, right? Crickets chirping. Nothing happens. Trade falls apart, and you do that a couple times, and of course now you've lost all the confidence in this market moving with consistency. That was last week. We didn't see anywhere near as bad today.